ultimately, this is a technology race. Tesla recognizes that, and Lucid recognizes that.
Lucid Motors, or CCIV stock, is seeing some crazy movements right now. Firstly going up a lot yesterday due to a couple of positive and exciting news, and now going down a bit because of negative market sentiment and because of the interview between Jim Cramer and CEO of the company, Pete Rawlinson. Guys, it is of course still down when we look at the drop it had a couple of weeks ago back during the EV stock sell-off, but now we might ask ourselves whether it is a good time to finally buy into this stock. Let's take a closer look at the stock and understand whether it can go back and break through its all-time highs of almost $60 a share. Firstly, as a quick recap, Lucid Motors is an EV company that just recently officially confirmed their merger with the SPAC CCIV, or Churchill Capital. In anticipation of this merger happening, the stock just kept on going up before it tanked after it was finally confirmed. Now, this may sound quite strange, but it is actually quite common with this SPAC plays that investors buy the rumors and sell the news. But now that the hype bubble has kind of deflated and we are seeing more long-term investors get into this great company, it makes me believe that the lows are finally behind us. We are all waiting eagerly for their Arizona factory to really get going and for the company to start delivering their cars. The plan is to eventually produce 90,000 vehicles per year, and they are pretty much finished with building their actual factory. And Elon Musk has famously said that building the actual factory is 100 times more difficult than building the EV car. So Lucid has really come quite far in this aspect, guys. So what recent news have we seen for this company? Well, speaking of the Arizona factory, CEO of Lucid Motors and really their entire Twitter page is going crazy right now, giving us tons of interesting updates and news about the company. On March 11th, CEO Pete Rawlinson took the Arizona-built Lucid Air model for a ride and said that it was a complete machine and that he has never seen anything like it before. He said that the car is the basis for the Volt-like experience that no one really has perfected yet. Now, of course, it is expected from the CEO of the company, but still, being the chief engineer for the Tesla Model S, Pete's words are still taken very seriously. And really, that is why the market was so excited yesterday on Tuesday, because in the after hours, Pete went on CNBC to discuss Lucid's latest operations, and he seemed very confident about their progress when it comes to their production. Now, unfortunately, we didn't hear anything new in that interview, and the market was a bit disappointed to not hear anything about the autonomous technology, for example, but it wasn't a bad interview at all by any means. When asked about the possible Apple car rivaling Lucid, he simply responded that he welcomes the competition and that it is ultimately a technology race, and that Lucid and Tesla recognizes this, which is what makes them stand out compared to many other traditional car companies like Volkswagen, Ford, or maybe GM. So friends, in the end, I think this just leaves more catalyst on the table for the future. Last time we got an update on the autonomous technology plans of the Lucid cars was back in July of 2020, and we all know how much investors love to hear about these plans that EV companies have for the future. After all, that is what justifies their higher valuations compared to traditional automakers like GM or Ford. We will, however, get a huge update today on Wednesday when it comes to the Lucid Cars Entertainment System, which is a collaboration with audio giant Dolby Digital. We have also seen Churchill's 10K being filed, so at least we have some insight about their merger with Churchill Capital and the actual numbers behind the transaction. But now guys, let's get right into the big question of whether this stock is worth investing in right now and what we need to see the company do for new all-time highs to happen. And in my opinion, it is quite simple really. This thing has huge potential to actually compete against Tesla and to grab market shares in the luxury EV market. And the valuation will make a lot more sense when we start seeing them finally delivering cars in the second half of this year. After all, that is how how they make their revenue. They are a car company, they have to sell stuff. For example, if they manage to reach their goal of 90,000 vehicles delivered a year in 2024, that is a revenue of $10 billion, which would of course warrant a much higher share price and reward all the shareholders of the company. This delivery aspect already seems quite promising, by the way, with Lucid just announcing through email that the Lucid Air Dream Edition is almost fully reserved. But still, there are so many skeptics out there that are afraid that delay after delay might happen, or that the demand is simply lower than expected. Although I love their cars and think they seem super promising, and although I am bullish on the stock and the company in general, I can't deny that the company has a lot to prove to be taken seriously by the larger growth investors. In the end, Lucid could totally get to $100 billion or even higher market cap, but it is a very high risk, high reward play. It all comes down to whether they will be alive and well in 5 to 10 years. So as a long-term investor, I am bullish, but I am also cautious and definitely view it as a higher risk play. For you swing traders out there, this could definitely be used to make a quick buck if you get in during a sell-off. Like many growth stocks, CCIV reacts very strongly to a positive market sentiment and goes up a lot, and to news and rumors in general really, and it sells off just as strongly when the market drops. So if you can be aware of that and keep your cool, there are a bunch of great opportunities there for traders. Personally, even for the longer term, I view Lucid as a good investment if you can emotionally handle all the up and down swings and hold it until we start seeing actual cars being delivered and new great technology being announced. Never invest in this with money you can't afford to lose, and I think you should be fine in the end. As EV enthusiasts, I think we sometimes focus too much on one single stock, and owning shares in all promising EV stocks like Lucid, NIO and Tesla for example is a great way to diversify and reduce your risk while still being exposed to a sector that I think will be worth trillions and trillions of dollars in the future. Not financial advice though, of course. Always do your own research and come to your own conclusions when investing your hard-earned money in the stock market. And guys, with that, I want to conclude today's video. If you're new here, by the way, my name is Sam and welcome to the channel. Here I talk about various different interesting growth stocks that I think have tons of potential for the future and will do big things pretty much. And I think Lucid Motors could be one of those companies, really. Anyways, if you liked this particular video, then please press that like button. It is the absolute best way you can support the channel, and it helps the video reach out to more people, helps the algorithm. Also, if you watched all the way to this point, and if you enjoyed this content, of course, I want to be here for more future content, then please subscribe to the channel and press the notification bell so you never miss another upload. As always guys, thank you for the support, thank you for watching, and I will see you in the next video.